All right, welcome back to the deep dive. Today we're tackling something that's been making a lot of noise lately. Artificial intelligence, or AI for short, and how it's shaking up the world of personal finance, and even more specifically, how we invest our hard-earned cash.
Yeah, it seems like everywhere you turn these days, there's another article or headline about AI, promising to revolutionize everything. But what we really want to do in this deep dive is cut through all that hype and figure out if AI can actually make a real, tangible difference in how you and I invest and grow our money.
Exactly. We're going beyond the flashy headlines and getting down to the nitty-gritty. And, along the way, we'll try to demystify some of the technology behind it all without getting bogged down in a bunch of super technical jargon. Because let's face it, most of us aren't computer scientists, right?
Right. We're investors. We want to know what works and if this AI thing is actually worth our time and attention.
Absolutely. Now, when most people think about AI in investing, they might picture some kind of supercomputer, crunching numbers and spitting out stock picks. But the sources we've been digging into paint a much broader and more nuanced picture.
Oh, absolutely. I mean, what's really fascinating is how AI is evolving in this space. It's gone way beyond just basic number crunching. We're talking about AI that can digest and understand complex information almost like a human analyst would, but at a speed and scale that we could only dream of. Think about algorithms that can analyze mountains of news and social media posts to get a feel for the overall market sentiment, trying to predict how things might shift based on what's happening in the world. And even, get this, dynamically adjusting your investment portfolio in real time to keep you on track towards your goals.
So it's not just about AI telling you what stocks to buy or sell. It's about providing a whole new level of insight and potentially even taking some of the heavy lifting out of managing your investments.
Exactly. And the really cool part is that this isn't some far-off futuristic fantasy.
Okay.
You're probably already interacting with elements of this technology in some of the financial platforms you're using right now. Take, for example, services like Wealthfront, Betterment, or even Zeroda's Nudge, which is really innovative. These platforms are using AI algorithms to actually build and manage investment portfolios that are customized to your specific financial goals, your income, your risk tolerance, all those personal factors.
It's like having a personalized financial advisor available 24/7, and often at a fraction of the cost of traditional financial advisors.
Yeah.
It feels like it's really leveling the playing field, making these sophisticated investment strategies accessible to a much wider range of people.
Absolutely. And that's a key part of why this is so exciting.
So let's talk about what this actually looks like for you, the listener, in your day-to-day life. How can you actually use AI in your personal finances right now? Where do you even begin?
Well, I'd say the most common entry point for most people is through what are called robo-advisors. These are essentially platforms powered by AI that are designed to do the heavy lifting when it comes to building and managing a diversified investment portfolio for you. You feed the system some basic information about your financial situation, your goals, your timeline, and the AI takes it from there, figuring out the optimal mix of investments and handling all the ongoing management.
So you're basically outsourcing the management of your investments to an AI. You tell it what you want to achieve, and it figures out how to get you there. Sounds pretty convenient.
It is. And there are a bunch of popular apps out there that do this really well. Betterment, Wealthfront, IND Money, just to name a few.
Now, for those listeners who maybe enjoy getting a little more hands-on, who actually like researching and picking individual stocks, there are AI-powered tools for them too, right?
Absolutely. For the stock pickers out there, there's a whole category of tools called AI stock screeners. These are platforms like Kahoot or Tickeron that use artificial intelligence to analyze massive amounts of stock market data, looking for patterns and potential investment opportunities that a human investor might miss. It's like having a research assistant with superhuman data processing capabilities working for you around the clock.
I like the sound of that. A superhuman research assistant. And AI's reach goes beyond just investing in stocks and bonds, right?
Oh, for sure. It's making its way into all corners of personal finance. One area where we're seeing this really take off is in smart budgeting apps.
Smart budgeting apps.
Yeah, apps like Clio or Plum. These use AI to track your spending habits, and not just track, but actually analyze them to provide insights into where your money is going and how you might be able to save more effectively. And they can even automate small contributions to your investment accounts based on your cash flow. So it's not just about investing, it's about managing your entire financial life more intelligently.
So AI can help you figure out where your money's going,
Yeah.
and then potentially free up more money to invest.
Exactly, it's all connected.
And, speaking of AI and investing, one of the things that really caught my eye in our research was the emergence of AI ETFs.
Oh yeah, AI ETFs are fascinating. It's where you see AI taking a more direct role in managing investments. So you've got these exchange-traded funds out there, like AIEQ in the US, where the buy and sell decisions are actually being made by artificial intelligence. These AI-managed ETFs use super sophisticated machine learning algorithms to analyze market data and make real-time investment decisions. It's a more hands-off way for investors to get exposure to AI-driven strategies without having to pick individual stocks or manage a complex portfolio themselves.
So basically, if you believe in the power of AI, but don't want to do all the work yourself, you can just invest in an AI-powered ETF and let the algorithms do their thing.
Exactly. It's becoming more and more accessible. And I think that's one of the big takeaways here. There are so many different ways to incorporate AI into your financial strategy. It's not a one-size-fits-all solution. The real question for each of you listening is, which of these AI-powered tools and approaches best aligns with my own personal financial goals and my comfort level as an investor?
It's about finding the right fit for you.
Exactly.
Okay, so we've got a good overview of the different ways AI is being used in investing today, but let's pull back the curtain a little bit and talk about the nuts and bolts, the how. What are the core technologies that allow AI to actually make these investment decisions?
So at the heart of a lot of this is something called machine learning, which sounds really complicated, but it's actually pretty straightforward.
Break it down for us.
Sure. So machine learning models, they're essentially trained using massive amounts of data, historical data, market data, all sorts of information. And as they process this data, they start to identify patterns, correlations, the things that tend to happen together. And then they use this knowledge to make predictions about what might happen in the future. But here's the really cool part. Unlike a traditional computer program that just follows a fixed set of rules, these machine learning models can actually learn and adapt as they go. They take in new data, they observe the outcomes of their past predictions, and they constantly refine their models to become more accurate over time.
So it's like they're constantly learning from their experiences and getting smarter.
Exactly. They're constantly evolving. And then you have natural language processing, NLP for short, which is a whole other area of AI that's having a huge impact on investing.
Natural language processing. I've heard that term thrown around, but I'm not entirely sure what it means.
Basically, NLP is the branch of AI that focuses on enabling computers to understand and process human language. It's what allows your smartphone to understand your voice commands or a chatbot to have a somewhat coherent conversation with you. And in the world of investing, NLP is being used to analyze massive volumes of text-based information, things like news articles, company reports, social media feeds, analyst opinions, all that stuff.
Wow, so AI is literally reading the news and social media to figure out what's going on.
It is, and it's doing it much faster and more thoroughly than any human could. It can gauge the overall sentiment, whether it's positive, negative, or neutral, towards a particular stock, a whole industry, or even the entire market, and it can do this in real time.
It's mind-boggling when you think about the sheer volume of information that's generated every single day. So AI can not only process all this data, but also react to it in a timely manner.
Exactly. And that brings us to the concept of real-time adjustments. Because AI can process information so quickly, it can also respond to changes in the market almost instantaneously. This could mean automatically rebalancing your portfolio to maintain your desired asset allocation, selling off assets that the AI has identified as becoming riskier, or maybe buying into emerging trends before they become widely known.
So it's like having an always-on, super-fast trading system that can react to news and events as they happen. That does sound like a significant advantage. But in our research, we also came across some important caveats, some things investors need to be aware of.
Right. AI isn't perfect, it has limitations. One of the big words is that it's heavily dependent on historical data. The AI's ability to make accurate predictions hinges on the quality and completeness of the data it's been trained on. If the data is biased or incomplete, that bias can get baked into the AI's decision-making, which could lead to suboptimal outcomes.
So garbage in, garbage out, as they say.
Yeah, pretty much. And AI can also struggle when faced with truly unexpected or unprecedented events, those so-called black swan events that nobody saw coming. Think about something like a sudden global pandemic or a major geopolitical upheaval. These are the kinds of things that haven't happened before in the same way, so there's no historical data for the AI to learn from. In these situations, human judgment and intuition might still be essential.
Right, because sometimes you need that gut feeling, that experience, that ability to read between the lines that AI may not fully possess.
Exactly. And then there's the black box problem. This is the idea that with some AI algorithms, it can be really difficult to understand why they made a particular decision. The internal workings of these complex models can be opaque, even to the people who designed them. And this lack of transparency can make it hard for investors to fully trust the AI's recommendations, even if they seem to be performing well.
So you might not know why the AI is telling you to do something, you just have to trust that it knows what it's doing, which for some people can be a bit unnerving.
It can be. So it's really important for investors to understand that even when using AI tools, you still need to stay informed, stay engaged, and ultimately make your own decisions about your financial future.
It's about using AI as a tool to enhance your decision-making, not to completely replace it.
Exactly.
Okay, so we've talked about the how, we've talked about the limitations. Now let's weigh the potential benefits that AI brings to the table for individual investors like you.
All right, so one of the biggest advantages of using AI in investing is emotional detachment. As humans, we're emotional creatures, and our emotions can often lead us to make irrational decisions, especially when it comes to money. We get scared when the market drops, we get greedy when it's going up, and we end up making impulsive choices that can hurt our long-term returns.
Oh, I'm definitely guilty of that. Panic selling when the market dips, that kind of thing.
Exactly. But AI algorithms, they don't have emotions. They make decisions based purely on data and analysis. They're not going to panic and sell everything when the market takes a tumble, and they're not going to get caught up in the hype and overpay for an asset that everyone else is chasing. So they can help bring a level of discipline and objectivity to your investing that can be hard to achieve on your own.
So AI can essentially act as your rational, unemotional investing partner. I like that.
Exactly. And then there's the massive data analysis capability. AI can process and analyze vast quantities of financial data, far more than any human could ever hope to comprehend. This allows it to potentially uncover hidden insights and identify emerging trends that might be invisible to the naked eye. It's like having a whole team of analysts working for you, constantly scanning the market for opportunities.
So it's about finding those needles in the haystack, the signals and the noise.
Exactly. And we can't forget about cost effectiveness and automation. Many AI-powered investment tools, especially those robo-advisors we talked about earlier, have much lower fees than traditional human financial advisors. And because they're automated, they can handle a lot of the routine tasks, like portfolio rebalancing, without requiring any manual intervention from you.
So less work and lower fees. That's always a good combination. And then there's continuous adaptation, right?
Yes. AI algorithms are designed to be constantly learning and adapting to new information and changing market conditions. They can identify shifts in trends, adjust investment strategies, and potentially improve their performance over time.
So it's not a static set it and forget it approach.
No, it's dynamic, it's evolving, it's constantly learning.
Now, on the flip side, we've already touched on some of the risks, things like data dependency, the black swan problem, and the lack of transparency. But are there any other potential downsides for investors to be aware of?
Well, one thing to keep in mind is that even though AI is really good at identifying historical patterns, it can't predict the future with 100% certainty. There will always be unexpected events, unforeseen circumstances, things that no model, no matter how sophisticated, could have anticipated.
Right, so it's not a crystal ball.
Exactly. And while AI can definitely enhance your decision-making, it's important to remember that it's still just a tool. It's not a magic solution that will make you rich overnight. You still need to do your research, understand the risks, and make informed decisions about your investments.
It's about using AI responsibly and realistically.
Absolutely.
Okay, so looking ahead, what does the future hold for AI in personal finance? What kind of exciting developments might we see on the horizon?
Well, one area that I think has huge potential is hyper-personalized investing. We're starting to see AI being used to create investment portfolios that go beyond just your risk tolerance and financial goals. Imagine AI that takes into account your individual values, your spending habits, even your ethical considerations.
So an investment portfolio that's truly aligned with who you are and what you believe in.
Exactly. And another area that I think is going to explode is voice-enabled investing. Pretty soon, you'll be able to manage your investments just by talking to your voice assistant. Things like, hey, voice assistant, invest $500 in a renewable energy ETF.
That does sound pretty futuristic, but I can definitely see it happening.
Oh, it's coming. And then, I think we're going to see a continued rise of what I call AI-human hybrid advisors. This is where human financial professionals use sophisticated AI tools to enhance their own decision-making, provide more data-driven insights to their clients, and offer a more personalized and holistic approach to financial planning.
So it's not about AI replacing humans, it's about AI and humans working together.
Exactly. The future of financial advice is likely going to be a collaboration between human expertise and artificial intelligence.
Well, this has been a really fascinating deep dive into the world of AI in personal finance. For our listeners who are excited about this and want to start exploring, what are some concrete steps they can take today to start incorporating AI into their own financial lives?
Well, a good first step is to simply try out one of the robo-advisors we talked about. Start with a small investment, see how the platform works, watch how it manages your portfolio, get a feel for it.
Dip your toes in the water, so to speak.
Exactly. And for those of you who are more interested in picking individual stocks, check out some of the AI stock screeners like Tickeron or Zigma. Many of them offer free trial versions, so you can play around with the tools, see what kind of insights they provide, and decide if it's something you want to incorporate into your investing process.
Great suggestions. Any others?
Well, if you're looking to get a better handle on your spending habits and potentially free up more money to invest, try out one of those AI-powered budgeting apps like Clio or Plum. They can be really eye-opening.
They can help you understand where your money's actually going.
Exactly. And then, of course, just stay curious. Keep learning about this stuff. Read articles, follow fintech blogs, subscribe to newsletters, and hey, keep listening to The Deep Dive because we're always going to be exploring these cutting-edge topics.
Absolutely. And as you're exploring these AI tools, one thing I think is really important is to take some time to critically analyze the recommendations the AI is making. Ask yourself, why is the AI suggesting this particular investment? How would I have approached this decision on my own? That active engagement will help you understand how the AI is thinking and also refine your own investment philosophy.
It's a great learning opportunity.
So as we wrap up this deep dive, the takeaway here is that AI is no longer some futuristic fantasy. It's here, it's powerful, and it has the potential to significantly improve how we manage our finances and invest our money. But it's crucial to approach it with a balanced perspective, understanding both its capabilities and its limitations.
Couldn't have said it better myself. And for those of you who want to delve even deeper into this topic, we've put together a free guide called Top 5 AI Tools for Beginner Investors. It includes links to all the tools we discussed, some tips on how to use them effectively, and an honest look at their pros and cons. You can download it right now by going to your website.com for main investing, or just click the link in the show notes.
Fantastic. And make sure you join us next time for another exciting deep dive as we tackle passive income myths you still believe. We're going to be debunking some common misconceptions and revealing the truth about building sustainable passive income streams. Until then, stay informed, keep learning, and keep striving to make your money work as hard as you do.